What's up, everyone? It's Scotty with MoneyVest. So we've got the super important Fed meeting tomorrow, and I will be live to cover the entire speech from Jerome Powell at 2:30 p.m. Eastern, as well as break down the summary of economic projections and the statement that's going to be coming out at 2 p.m. Eastern from the Federal Reserve from the FOMC meeting. So very, very important day, and this is really going to dictate how the markets trade for the rest of this month, not to mention for potentially setting us up for the rest of the year, because the summary of economic projections is really going to be our guide to what the Federal Reserve is planning to do with respect to interest rates. So hope you all enjoy this video and find it helpful. Make sure that you drop a like, and of course don't forget to subscribe to the channel if you're just joining us for the first time. The links to our Discord and Patreon is going to be down below if you're interested in joining us, and of course getting access to all the members only private videos, including all the trade alerts and trade ideas and options alerts, and as well as our weekly newsletters and our moneybest.com website that's going to be given access to for all the members only in the next few weeks also. So link's going to be down below with that 16% annual discount for the next 10 to 11 days. We'll love to have you on board. So this right here is the market. So we did see a very nice intraday recovery for the NASDAQ, S&P, and the Dow, pushing higher very, very nicely. So the Dow here just over 39,000, S&P just over 5,100, and the NASDAQ here just over 16,000, with, of course, the entire heat map looking like this. AMD did drop, Tesla did drop, Qualcomm, Texas Instruments did pull back a little bit, so did Intel, but everything else very, very green, very nicely pushing higher on the day. So almost all sectors were pushing up with the exception of basic materials, which was slightly down, as well as comm services on the back of, I believe, Google and Meta, which were slightly down, flat or down. In the last 1 week, we've seen a bit of a split market with healthcare, technology, and real estate selling off, with energy, comm services, and industrials pushing higher. And of course, in the last 1 month, every sector, everything is up in the last 1 month here. Now, volatility, coffee prices and oats pushing up, with cocoa, platinum, lean hogs, and of course, sugar prices selling off, with Bitcoin just back under 61,000 and Ether just a little bit over $3,000 as well. So we have seen definitely a significant pullback in crypto, considering how overbought and overextended it really was. Now, the Fed is so far from equilibrium as markets await rate guidance. BlackRock's Rick Ryder says, on Wednesday, the Fed will announce its policy decision and release a forecast for interest rates as well. So very, very important day, as I've already mentioned. And the bottom line is that the Federal Reserve and their guidance for 2024 is really what's going to dictate markets' reaction. It's not what they do at the meeting, it's what they are planning to do with interest rates is what's really going to be the most important catalyst for the market. And of course, Jerome Powell's speech, the Q&A, all that being very, very important. And like I said, I will be live to cover all of it. So coming over to cryptos first, Ether selling off quite considerably here from 4,000. It's down about 25%. So again, the RSI selling off here. We talked about this in our previous videos, considering how overbought cryptos were. This is a very, very normal thing. And Bitcoin here also selling off on the back of a very overbought, overextended RSI and MACD, down about 18%, back down to under 62,000. And the next ideal target in that support is going to be around 48 to 51,000. And I know how volatile crypto can be, and those right there are going to be some levels to keep in mind for Bitcoin here. Talking about crude oil, so crude oil continues to rip higher. So $82 a barrel is where we're at now, up another almost 2% this week. This is a problem. As I've already discussed, this is quite an interesting problem because we are seeing energy prices push higher once again, and that is the last thing we want to see, because that's going to put an impact on inflation. And of course, that next resistance and target is going to be at $93, $94 a barrel for crude. So that is going to be that next resistance and target. And of course, this right here is going to be another level to keep in mind for crude oil, with the support level that's going to stay, but roughly it's $70 to $73 a barrel for crude oil. But this, of course, is going to put a little bit of an impact on overall inflation as well. So next resistance and target is going to be $93, $94 for crude oil. Now, coming over to the entire market, and first, let's just talk about the 10-year treasuries, right? The yields, they have been pushing higher as well, although they are pulling back under 4.3% again after coming up to that resistance of 4.35%. So that right there is going to be that level to keep in mind for the 10-year treasuries. And of course, the another support level is going to be around 4 to 4.097, so under 4.1%. So we are kind of in the middle range. We could easily, of course, rip higher depending on inflation expectations and interest rate guidance from the Federal Reserve. Of course, the most dreadful level for the market is going to be closer to 5% again, but the much better level is going to be closer to 3.2. So those right there, we're kind of like in the middle. You could rip higher, go down. Obviously, nobody knows, but depending on which direction we basically take is where the market's going to be in the opposite direction. So the yields start pushing higher. That's going to be putting a lot more impact on growth stocks, on technology stocks, and that could result in the market rotating back lower. And of course, if you do end up, let's say, lower, then the market's going to be ripping much higher because the risk-free rate is going to be lower, and that's going to put a upside momentum on the growth and the technology sector. So, and I'll be doing a separate, more dedicated video on the bond market and Treasury Department as well, because we have seen, again, the overextended supply of bonds issuance over the coming months here because of the deficit spending from the United States government. And again, there's going to be some levels to keep in mind because TMF has obviously been selling off on the back of these 10-year Treasuries pushing higher. So from highs of $50, it's back down to 11.5%. I obviously exited in the mid-60s. Since then, it's already down 23-24%. I will be looking at entering TMF here very soon, but again, it's going to be a very tactical play, and entries need to be precise for TMF. So again, if you want to get access to all these alerts and when I'm planning to re-enter some of these trades, link's going to be down below. We'd love to have you on board, and there is a 16% annual discount available until the end of this month with a few more spots left for the month of March. Starting with S&P 500, so SPX continues to push higher today, up over 0.5%, so almost back up to this all-time high. Looks like the buyers are stepping in once again, pretty much, at an all-time high here again. And tomorrow's Fed meeting is really going to dictate whether we break out to new highs or if we start selling off, we start rolling over. We have seen a lot of consolidation, so we cannot take away from the fact that we are still very much in this consolidation range. Although we are coming up to a very important resistance here, the all-time high sitting at 51.87. And of course, the support level is going to stay put in and around this level here at 5,000 for the S&P as well. So lots of consolidation sideways in that range. Tomorrow, again, we'll kind of monitor the situation and how we trade. And this right here is the NASDAQ, once again, consolidating sideways in that range at the moment, with the resistance up to as much as 16,300, with the support down in the 15,009 to sub 16,000 for the NASDAQ as well. Talking about Apple, and Apple here also pushing higher very nicely. We talked about this trade idea in our previous videos and in our newsletter as well. So very nice momentum back up. Next target and resistance is going to be close to 196, 195. I've talked about that resistance, and that target's about 14-15% potential upside from these levels. RSI MACD in favor of Apple's potential upside here. So we'll keep a close eye on this stock, even on the weekly time frame. It looks very attractive, very appealing from these levels, considering how oversold we are from a technical basis. So Apple is perhaps the only Magnificent 7 stock that actually is quite interesting from a technical analysis standpoint. Everything else is already overbought or trading at an overextended level. Similar to Amazon, you can see the RSI well over 70, MACD also up there, resistance at 178. That's exactly where Amazon is, consistently trading inside this uptrend of higher highs and higher lows, and support level is going to stay put at 159 down to $143 for Amazon as well. So resistance is going to stay put at 178 for Amazon. Talking about Tesla, and Tesla here also is one of the other Magnificent 7 companies that has potential for upside here, given how oversold we are, given how much we've been selling off. The momentum is very much to the downside, lower highs and lower lows, so still inside this downtrend. And 150s is where my beginning of my fair value will be. And that support is going to be very strong support as we have validated back in April of 23, all the way down to as low as 100 for Tesla as well. Resistance and target's going to be up to 177 to as much as $203, $204 for Tesla moving forward. Talking about NVIDIA now. So NVIDIA on the day was up over 1%. So consolidating sideways. So it is, once again, seems to be forming some type of a potential bull flag, because on the daily time frame, you'll notice that this right here is the entire momentum higher. We're seeing a lot of consolidation. So there's possibility for yet another breakout beyond $1,000 for NVIDIA, and that of course would be quite insane. Support level is going to stay put at 842, resistance at 936 for NVIDIA at the moment. So those right there are going to be some levels to keep in mind. Lots of consolidation sideways for NVIDIA. Advanced micro devices also rolling over, so it is coming down from highs of well over $226, down another 4.8, almost 5%, so down about 20%. Overbought RSI, very, very overextended price action, so this is very normal. and support level is going to stay put down to 164 for advanced micro devices, down to as low as 151 for the company, to as low as 130 and 118. Some of the other levels to keep in mind for AMD as well. Very nice, consistent higher highs and higher lows. So this right here is going to be that higher low that it continues to validate at the moment. But of course, if it does end up, let's say, breaking down, then there is potential for us to see the mid 150s, possibly low 100s also, if there is a bigger breakdown and the entire market starts to roll over as well. Talking about PayPal here, and PayPal on the day was down about 1.9%. Probably jinxed it because it was seeing a lot of outperformance against the S&P and the NASDAQ here, consistently trading inside this downtrending channel, coming up to that slower high. So it was pretty obvious that it was going to kind of hit up to some resistance here fairly soon. It's starting to roll right back down with an RSI MACD that's not quite overbought, but definitely still a little bit on the overextended side. And same is going to be at $65, $66. With the support levels, it's going to stay put at $57.50 for PayPal. So lots of consolidation sideways and still within the context of this downtrend of lower highs and lower lows for PayPal at the moment. Talking about Visa here, and Visa also consistently pushing higher with this uptrend, higher highs and higher lows. I talked about Visa in another video, so make sure that you do check that out. But support level is going to stay put at $249 for Visa, down to as low as $234 per share. So lots of consolidation sideways for Visa. But of course, breaking out to new all-time highs. Just be super careful considering the negative divergence on the RSI and the MACD along with the price action. So would not be surprised if you do see a bit of a pullback here. And again, we did see a pullback. So this right here was a pullback of about 3%. Again, all these dips are getting bought up because Visa is a very high quality business. And valuation wise, like I said in my previous video, it is not super expensive, but it's also not cheap by any means, right? So it is at 33 times earnings, a little over 17 times sales. So definitely, up there in terms of that valuation. So a lot of the times, when we do our analysis on individual stocks, for example, the question isn't, is the stock overvalued, right? When we're talking about whether the stock is a buying opportunity or not, the question isn't that, is the stock overvalued? Because when you ask that question, a lot of people can maybe come up with stories, come up with actual analysis that can maybe justify the price and why it's trading at such a high premium relative to other market participants or the industry or historical averages even. So there's a lot of conversation or discussions that can be had that, okay, this stock A, B, and C is not overvalued because of so and so and so. But the right question to ask really is the opposite question, which is okay, if it's not overvalued, is it undervalued, right? And oftentimes you will learn that if you ask this question, right, is the stock undervalued to be buying? You'll find yourself kind of, with a very clear answer most often that no, I mean, it's not cheap, it's not undervalued to be deploying a significant amount of cash or being aggressive here for any specific stock that you're looking at. So instead of asking, is the stock overvalued? Ask yourself, is the stock undervalued? Because if the answer to is the stock overvalued, no, still won't justify buying that stock, the only rationale for buying that stock would be that, okay, it's undervalued, meaning that it's trading below its intrinsic value, below where the stock should be worth, right? That's what makes for a good deal. So asking the right question in that sort of situation will kind of help you navigate and understand whether the stock, whatever stock you're looking at, whether it's a buying opportunity or not. So for Visa, you can make a case that, okay, for the next 5 years, everything that Visa is doing with the sticky business model, with payment processing, everything that they're doing, they may not be overvalued. They may be able to demand such high premiums and valuations are reasonable at these levels. But let me ask you this, is Visa undervalued at 287 with a market cap of well over 570 billion? Most likely the answer is going to be not quite, right? I mean, better deals can be out there. For Visa is just one of the many great stocks and companies, but there could be better deals out there. So that's a much better question, in my opinion, to ask. And of course, that's going to help us kind of be more clear in our understanding of whether it's a stock is undervalued or overvalued. Talking next about Meta platforms. So Meta here is on the day down about 15 basis points. So lots of consolidation sideways. Support level is going to stay put at 475, 476, down to as low as 454 for Meta, with a resistance all the way up to 521, 520s for this company as well. And again, another support down in 386, massive gap to eventually fill for Meta. Again, it may or may not fill. Not all gaps are supposed to get filled technicality-wise. Netflix here continues to push higher. Resistance going to stay put at 622, support level at 473, 474. For Netflix, just again, a lot of uptrend, negative divergence continues, so got to be super careful here. And Google has already, again, pushed higher very nicely to our target, and our trade idea on this is complete resistance. We already talked about in the 152, 153 levels. Support level is going to stay up at 131, down to as low as 120s for Google as well. And then finally, we come over to Microsoft, pushing higher, up almost 1%, continues to rally and rip higher. Same thing with Microsoft. Great company. Is it overvalued? People could argue it is. People could argue it's not, but let me ask you, is it undervalued at these levels so that you can actually buy at 421? And I think the answer to that question, most people would say that no, Microsoft is not undervalued. It may not be overvalued, but it could be fairly valued, but it's not undervalued by any means to start deploying cash aggressively into this company. So support level is going to stay put at 396, close to sub 400, down to as low as 364 and 349 for Microsoft moving forward. Talking about Enphase, and Enphase here pushing down 1.8%, so low 100s again. Support level is going to stay put at $108. A little bit more on the oversold side here. So Enphase is probably one more company, one more stock that does offer somewhat of a better risk-reward trade-off. $92, $93 is going to be that next support level to keep in mind for Enphase moving forward. And then finally, we've come over to Costco, and Costco here also consolidating sideways after hitting new all-time highs of well over 787, consolidating after the pullback, and support level is going to stay put down to 678 at the moment. So get ready for tomorrow's Fed meeting. Very, very important day. Hope you all enjoyed this video and found it helpful. Make sure that you drop a like, and of course, don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below. 16% annual discount available until the end of this month. As always, happy investing. I'll see you all in the next video.